All right, so there are a couple of must-have levels on any chart for any day trading strategy that I trade a bunch of strategies, and no matter if it's a trend following or a reversal system, I always have these levels on my chart. And yes, I do also look at trend lines and support resistance lines that I draw in myself and supply and demand zones. But these levels are my guiding point for every strategy, and they are zero subjectivity, nothing, and they are super easy to use. So the levels that I have on every chart, well, I do use this template here, and then I have my day trading strategies where before I take a setup, I quickly glance at this template to see whether I'm breaking and retesting one of these levels, if I'm trading into one of these levels, or if we have just faked out one, etc. So the first level I have on my chart is yesterday's high and low. This is a 1 hour chart, and these levels are incredibly reliable, even from the day before. So this here, for example, this line is the high from Thursday. So we can see there's some respect here. But then one day later, we can still find that price rejects this area. And you can see, and then we go down here, for example, nice rejection. Here, break and retest of yesterday's low. Here we are testing yesterday's high. Here we are testing yesterday's low. Yesterday's low, can't quite make it. Yeah, yesterday's low, break and retest, etc. So super high quality level, and having this on your chart will help you a lot with making trading decisions, well, based on any trading strategy that you trade. Then we also have last week's high and low. They work very similar, just in the sense that they do have more weight and price might be more confused around them because they're from a higher time frame. So if you're trading on the 5-minute chart or the 1-minute chart and you're seeing a short here, for example, and then you go to your levels template quickly, you see, oh wow, this is actually last week's low. This adds a ton of confluence. So you have more conviction in the setup. You can add more size, etc. Then we also have last month's high and low. Price doesn't tap often into these, but when it does, it's quite significant. Again, you think you can pick a day trade long down here, or a day trade short up here, or a short here, or a short here, a long here. Yeah, so this was an inside month. We only tapped into last week's and last month's low here, and then we moved higher, higher, higher. So another incredibly powerful level. So we have yesterday, last week, last month, and then we have also last year's high and low, which for me is this fat orange line here. And this is not really a level that you can trade because, well, maybe you can, because if you look at this rejection here, that was really to the pip. But usually there's a lot of range around this level. So you use this on a higher time frame, say on a daily chart, to see, okay, yesterday we tried to break above this, couldn't, then we retested it. So here on this day you can try to pick a short, then we broke and retested this again, broke above. So on this day or on this day you can try to pick a long. So this adds confluence on the higher level, again for your day trades. Then what I like to have on my chart as well is this level here, this purple line here, and that is the close of yesterday. We could also use today's open. Of course, in Forex, they are very similar. In other markets that only run a couple of hours, today's open and yesterday's close might be different because there are gaps. In FX, very often the same. And when you take day trades, and for example, you can manage to take a trade around yesterday's close, then you have a really high probability of price expanding in the direction of your trade based on the context. And why is that? Because think about it, when we are around yesterday's close, what does the daily candle actually look like? Well, it's still tiny. Or maybe it came all the way up and then we came all the way back down again. And now we have a rejection. So there's still a lot of range for the day to expand. Here, for example, we bounce from yesterday's high with a nice rejection. You can pick a very nice day trade short here from yesterday's high. And then here, for example, we break above the yesterday's close, we retest it. After faking out last month's low, so our bias is long already, we pull back, then we try to break above yesterday's close, we retest that, and then you can pick a day trade long right here. Same game here, day trade long. And then here, for example, we bounce from last week's low, the blue line. Before shooting lower, we break through yesterday's close. That now we know, okay, this day is moving from a green day to a red day. This gives us additional bias and confidence in our shorts. Here, for example, break, retest yesterday's close before going lower. Here, bounce from last month's level. This was last month's high. Break, retest, short here, etc. Then I also like to have the weekly open on my chart. That's this blue line here, this dashed line. Also great support and resistance. As you can see, price has a lot of trouble closing above or below these very often. And they are great entry points into trades, these weekly opens. Additionally to that, I also have the monthly open on my charts, which is this orange line here. Exactly the same concept. Here, break, retest of the monthly open holds. We shoot higher. Here, test of the monthly open. We go higher into the weekly open and last week's low. This is then a fantastic short into last month's low. Rejection, long. And you time these trades on the lower time frames, like the 5 minute, the 1 minute. And you can use any entry model that you like. I don't know, a head and shoulders, triple tap, reversal pattern, anything that you want to trade. You could use ICT, FVGs, whatever. These levels are absolute key and so strong on your chart that no one should miss them. And last but not least, I also have the pivots. And for the pivots, I only use the daily, weekly, and monthly pivot. So I don't use the S1, R1. So I have this green line here. This is for every day my daily pivot. Then I have this is the monthly pivot, this purple line. And then I also have the weekly pivot, which is this black line here. And then whenever you see confluence of these levels, that's when you really want to pay attention. For example, I have taken a long here in the Nikkei for various reasons. But if you look at the level situation, we have last week's high here, this blue line. We have this week's open here. We have the monthly open down here. Yeah, it could also be here, up here, together with the weekly open. That sometimes the indicators are a bit messy, but the general area is what's important. Then we have here this purple line, the monthly pivot, and we broke above all of that and came back to retest all of that, and now we're moving higher. So do you think it would make sense to pick a long here or not? Well, of course. And then I also like to have the sessions on, where just so I know in which session I am, the Asia, the London, and the New York session, 4-hour windows each. And then I also like to have the weekdays just for orientation. And this is my basic levels layout. Now, Before any trade that I take with any day trading strategy, I always go to this level setup first to confirm my idea or to reject it. Sometimes I do get a really nice setup on the lower time frame, but then I see on a higher time frame I'm trading straight into a level, or we faked out a really strong level yesterday, so my bias is short instead of long, etc. Now here, obviously, the bias is long. We also have a nice trend line here, by the way. And this is just absolute a killer setup. If it's gonna run, then there's a huge risk reward potential here. If it's not gonna run, then I'm already at half risk here. And let's see where it wants to go. So have these levels on your chart. Here are the indicator names. And simply go back through your old trades with any day trading strategy or even a swing trading strategy, and look at whether these levels would have helped you with your entries and exits, or whether you could have avoided some losses or maybe held some trades with more conviction. And I guarantee you that will be the case. The market wizard Linda Roschke has these levels on her chart all the time. And there's a reason for that. They're objective. Algorithms look at them. They are the same for every market participant. And that's why they work so well. That's it. Have fun doing your research.